President Trump's trade war, few Americans have been hit as hard as farmers. The tariffs and China's retaliation have really been a gut punch, especially for soybean farmers.
The Trump administration admits farmers are not doing well under President Trump's tariffs, most especially soybean farmers. The, quote, collateral damage, as Politico puts it, in the president's trade war with China. Since May, China has not purchased a single U.S. soybean, not a one, according to the American Soybean Association.
New signs the trade tension between the United States and China are taking a toll on America's farmers. For the first time in nearly 7 years, China did not import a single soybean from the United States in the month of September.
Something unbelievable is happening in the global food market. While American farmers are struggling to sell their crops, China just struck billion-dollar deals with Argentina and Brazil, turning the tables on the U.S. economy. And here's the twist. The U.S. government is actually funding one of those same countries that replaced its own farmers. It sounds like a movie plot, but it's real. America's breadbasket is shrinking, foreign profits are growing, and nobody seems to be talking about why. So what really pushed China to cut the US out of the picture? And is America accidentally helping its own competitors take over the world's food supply? The rise and slow fall of the US soybean boom. For decades, soybeans have been the quiet powerhouse of American farming. They don't make headlines like oil or tech stocks, but for millions of farmers across the Midwest, soybeans are the economy. Every fall, golden fields stretch for miles, and the combines roll through like clockwork. It's a time of relief, pride, and reward. Months of hard work finally paying off. But in 2025, something feels off. The fields are full, the crops are ready, yet the buyers are gone. Just a few years ago, China couldn't get enough of America's soybeans. They were buying over half of the US harvest, billions of dollars worth every year. It was a win-win relationship. America supplied the crops, China fed its people and livestock, and everyone made money. Farmers bought new tractors, hired more workers, and felt secure. Then came the trade wars. When tariffs started flying between Washington and Beijing, soybeans became an unexpected casualty. At first, most people thought it would blow over. Farmers were told to hang in there, that new markets would open up soon, but instead, China quietly turned elsewhere, to South America. And once those new deals were made, there was no turning back. By late 2025, reports confirmed what farmers feared most. China had imported zero soybeans from the United States for the first time since 2018. Zero. The same country that once bought more than $12 billion worth a year had completely walked away. Instead, they struck huge deals with Argentina and Brazil, including one for nearly 7 million tons of soybeans at a bargain price. To make matters worse, Argentina offered tax breaks and discounts to close the deal faster. So while American farmers were sitting on full silos, South American growers were cashing in big time. For US farmers, it felt like the rug had been pulled out from under them. Prices dropped fast, local elevators stopped buying, and the frustration spread through rural America like wildfire. People who had spent generations building farms suddenly didn't know if they'd be able to pay their loans or keep their land. Many started asking the same question: how did this happen? How did the country that promised to put America first end up helping its biggest competitor win the very market the US had built? The truth is, trade isn't just about crops, it's about politics. And somewhere between tariffs, foreign aid, and political strategy, America's farmers became the ones paying the price. But this story doesn't stop there, because while the United States was struggling to find new buyers, something even more surprising was happening behind closed doors. Deals and alliances that made farmers question who was really on their side. How China and South America cashed in while US farmers got sidelined. When China walked away from American soybeans, it didn't take long for someone else to move in. South America saw the opening, and they took it fast. In late 2025, Chinese importers signed massive deals with Argentina and Brazil, snapping up millions of tons of soybeans. Argentina even went as far as suspending export taxes just to sweeten the deal. Think about that. While US farmers were sitting on full silos, Argentina was cutting prices and rolling out the red carpet for China. The timing couldn't have been worse. But this wasn't some random shift, it was strategy. China had been preparing for years to reduce its dependence on American crops. After the first tariff battles in 2018, Beijing started investing heavily in trade partnerships across South America. They poured billions into port upgrades, rail lines, and crushing plants in Brazil and Argentina, all designed to make South American soybeans cheaper and easier to ship. By 2025, that investment paid off big. When relations with Washington hit another rough patch, China didn't have have to panic. They already had 2 loyal suppliers ready to deliver at a discount. Meanwhile, American farmers got left behind. For decades, China was their biggest and most reliable customer, buying more soybeans than any other nation on Earth. That demand kept rural America alive. Small towns, seed suppliers, trucking companies, they all thrived because China kept buying. But once that demand disappeared, the entire system began to shake. The US government tried to help. There were emergency aid packages, promises of new trade deals, and even a few public statements saying farmers will come out stronger. But out in the fields, that didn't feel true. You can't pay off a loan with promises. You can't keep a farm running on wait and see. Farmers like Scott Brown, a soybean grower in Arkansas, told reporters the situation felt like being painted into a corner. He said, "I can grow it, I can harvest it, but if there's nowhere to sell it, what good is it?" His frustration wasn't unique. Across the Midwest, farmers were watching prices fall while storage costs climbed. The same soybeans that once sold for $13 a bushel were now down near $10. Sometimes even less. But here's the twist that really stung. While American farmers were losing billions, the US Treasury quietly announced a $20 billion aid deal with Argentina, the very country that had just stolen the Chinese soybean market. The goal, officials said, was to stabilize Argentina's collapsing economy, but to many farmers back home, it felt like betrayal. Think about it. Taxpayer dollars being used to help a foreign competitor whose cheap soybeans were crushing American prices. It sounded almost too ironic to be true. And yet, it was. Even more shocking, that aid package came with no strings attached. No trade conditions, no requirements for fair pricing, nothing to protect American agriculture. It was a clean, open-handed bailout, while US farmers were still waiting for relief. And China, they couldn't have planned it better. Not only did they secure cheaper soybeans, but they also strengthened ties with Argentina, a country now financially supported by Washington itself. It was a win-win for Beijing and Buenos Aires, and a lose-lose for American farmers. In trade terms, that's what you call a checkmate. As the months rolled by, Brazil and Argentina expanded production even further. Their ports were busy, their export numbers skyrocketed, and their currencies stabilized. Meanwhile, US grain elevators stood half empty, and thousands of small farmers began to wonder if they'd even plant next year's crop. The message was clear. The world wasn't waiting for America anymore. But the question remained, how did things get this far? And why would US leaders risk alienating the very people who built the backbone of the rural economy? That's where the story turns inward, toward Washington's decisions, farm bailouts, and a growing sense that politics, not production, was deciding who survived. The US farm crisis, livelihoods, trade deals, and government aid. While China and South America were thriving, life in rural America was turning into a struggle most city folks could barely imagine. For generations, farming has been more than just a job. It's a way of life. Families pass it down like a legacy. You inherit the land, the barns, the debt, and the hope that next year will be better. But lately, that hope has been fading fast. The numbers tell the story. Farm bankruptcies are at a 5-year high. Median farm income is negative. That means the average farmer is losing money and working 12-hour days just to fall behind. Across the Midwest, small towns are drying up as businesses that depend on agriculture start to close. The local co-ops, the feed stores, the diners, they all rely on the same thing, a strong harvest and a fair market. But now, the markets are gone. The US Department of Agriculture even reported that America's agricultural trade deficit is widening, the first in decades. That's right, the country that once fed the world is now importing more farm goods than it exports. For farmers, it's more than bad economics. It's a blow to national pride. To patch the wound, Congress approved a $42 billion emergency aid package. The checks were meant to keep farmers afloat, but even the USDA admitted it was more like a band-aid than a cure. Economists warned that the payments would only delay a deeper crisis, not stop it. One analyst called it a slow-motion collapse hidden under subsidies. Meanwhile, the farmers themselves didn't want handouts. They wanted markets. Scott Brown, the same soybean farmer from Arkansas, said it best. "I don't want aid, I want trade." He wasn't being dramatic. Like most farmers, he just wanted a place to sell his crops at a fair price. He could handle the weather, the long hours, and the debt. What he couldn't handle was policy decisions made thousands of miles away that wiped out his market overnight. And that's where the frustration runs deepest, because while the government says it's standing with rural America, its actions tell a different story. The $20 billion currency swap deal with Argentina, the same country now selling soybeans to China, made that painfully clear. To many, it felt like a betrayal dressed up as diplomacy. Washington was helping a foreign competitor while American farmers were fighting to keep their homes. And remember, that aid came with zero conditions. Argentina didn't have to buy a single American crop in return. There was no guarantee of fair trade or market access, just billions in US dollars to stabilize their economy. If you're a farmer watching that unfold from a small town in Iowa or Arkansas, how could you not feel angry? Even inside Washington, some officials quietly admitted the optics were terrible. An Associated Press photographer even snapped a picture of the US Treasury Secretary's phone during a UN meeting, showing a message from the Agriculture Secretary that read, "Soy prices are dropping further because of this. This gives China more leverage on us." That one message said everything. The US was literally funding the same system that was driving its farmers into the ground. But it's not just about soybeans anymore. Beef, pork, cotton, almonds, dairy. Almost every major farm export has taken a hit since the tariffs and trade wars began. And while foreign competitors are expanding, the US has not signed a single major trade deal in more than a decade. That's a lifetime in global economics. Farm leaders are begging Washington to get back to the negotiating table. The head of the National Corn Growers Association said, "If we don't make new deals soon, we'll lose more markets and maybe more farmers." But the government seems focused elsewhere, leaving rural America stuck in limbo. And yet, here's the part that surprises most outsiders. Political loyalty in farm country remains strong. Many farmers still support the same leaders whose policies helped create this mess. Why? Because for them, politics isn't just about money. It's about identity. It's about standing with someone they believe understands their world, even if it costs them financially. But that loyalty is starting to crack. As more farms close and more land gets sold off to corporations or foreign investors, people are asking hard questions. Who's really being put first? The American farmer or global interests? Because at the end of the day, a slogan doesn't pay the bills. As one farmer put it in an interview, you can't feed your family on patriotism. You can't plant pride. And maybe that's what makes this story so painful. The very people who built America's food supply, the ones who feed the nation, are being squeezed between politics and profit. But this isn't the end of their story, because while the farm economy struggles, there's still a fight ahead. One that could reshape not just trade, but the entire future of American agriculture. Conclusion: in the end, this isn't just a story about soybeans, it's about survival. America's farmers are caught in a global game they didn't choose to play, watching their livelihoods traded away like poker chips. China found new allies, Argentina gained a lifeline, and Washington's decisions left rural America holding the short straw. But here's the thing, the world still needs what American farmers grow. The question is whether leaders will fight for them before it's too late. Because once the land changes hands, it's gone. As markets shift and new trade deals form, one truth remains: whoever controls the food supply controls the future. So maybe the real battle isn't in the fields, it's in the boardrooms, the trade tables, and the quiet deals shaping tomorrow's economy. What do you think? Is this just bad policy or something deeper?